This coverage pays for damage to the policyholder's car resulting from a collision with another car, an object, or as a result of flipping over. It also covers damage caused by potholes. Collision coverage is generally sold with a deductible of $250 to $1,000. The higher the deductible, the lower the premium. Even if policyholders are at fault for an accident, collision coverage will reimburse them for the cost of repairing the car, minus the deductible if the policyholder is not at fault. The insurance company may try to recover the amount it paid from the other drivers. Insurance company a process known as subrogation. If the company is successful, policyholders will also be reimbursed for the deductible. Comprehensive. This coverage reimburses for loss due to theft or damage caused by something other than a collision with another car or object, such as fire, falling objects, missiles, explosion, earthquakes with windstorms, hail, flood, vandalism, and riots, or contact with animals such as bird or deer. Comprehensive insurance is usually sold with a $100 to $300 deductible, though policyholder may opt for a higher deductible as a way of lowering their premium. Comprehensive insurance may also reimburse the policyholder if a windshield is cracked or shattered. Some companies offer separate glass coverage with or without a deductible. States do not require the purchase of collision or comprehensive coverage, but lenders may insist borrowers carry it until a car loan is paid off. It may also be a requirement of some dealership if a car is leased. Point number 6. Uninsured and underinsured motorist coverage. Uninsured motorist coverage will reimburse the policyholder, a member of the family, or a designated driver if one of them is hit by an uninsured or a hit-and-run driver. Underinsured motorist coverage comes into play when a at-fault driver has insufficient insurance to pay for the other driver's total loss. This coverage will also protect a policyholder who is hit while a pedestrian. Homeowners insurance basics. Homeowners insurance provides financial protection against disasters. It is a package policy, which means that it covers both damage to property and liability or legal responsibility for any injuries and property damage policyholders or their families caused to other people. This includes damage caused by household pets. Damage caused by most disasters is covered, but there are exceptions. Standard homeowners policies do not cover flooding, earthquakes, or poor maintenance. Flood coverage, however, is available in the form of a separate policy both from the National Flood Insurance Program (NFIP) and from a few private insurers. Earthquake coverage is available either in the form of an under endorsement or as a separate policy. Most maintenance related problems are the homeowner's responsibility. A standard homeowner's insurance policy includes four essential types of coverage. They include point number one, coverage for the structure of the home. This part of a policy pays to repair or rebuild a home if it are damaged or destroyed by fire, hurricane, hail, lightning, or other disaster. Listed in the policy, it will not pay for damage caused by a flood, earthquake, or routine wear and tear. Most standard policies also cover structures that are not attached to a house such as a garage, tool shed or gazebo. Generally, these structures are covered for about 10% of the total amount insurance on the structure of the home. Point number two, coverage for personal belongings. Furniture, clothes, sports equipment, and other personal items are covered if they are stolen or destroyed by fire, hurricane, or other insured disaster. Most companies provide coverage for 50 to 70% of the amount of insurance on the structure of a home. This part of the policy includes of premises coverage. This means that belongings are covered anywhere in the world unless the policyholder has decided against off-premises coverage. Expensive items like jewelry, fruits, and silverware are covered, but there are usually dollar limits if they are stolen. To ensure these items to their full value, individuals can purchase a special personal property endorsement or floater and insure the item for its appraised value. Trees, plants, and shrubs are also covered under standard homeowners insurance, generally up to about $500 per item. Perils covered are theft, fire, lightning, explosion, vandalism, riot, and even failing aircraft. They are not covered for damage by wind or disease. Point number three, liability protection. Liability coverage protects against the cost of lawsuits for bodily injury or property damage that policyholders or family members cause to other people. It also pays for damage caused by pets. The liability portion of the policy pays for both the cost of defending the policyholder in court and any court award up to the limit of the policy. Coverage is not just in the home but extends to anywhere in the world. Liability limits generally start at about $1 lakh. However, experts recommended that homeowners purchase at least $3 lakh worth of protection. An umbrella or excess liability policy which provides broader coverage including claims for libel and slander as well as higher liability limits can be added to the policy. Generally, umbrella policies cost between $200 to $350 for $1 million of additional liability protection. Homeowners policies also provide no-fault medical coverage. In the event that someone is injured in a policyholder's home, the injured person can simply submit medical bills to the policyholder's insurance company. In this way, expenses are paid without a liability claim being filed. This coverage, however, does not pay the medical bills for the policyholder's own family or pets. Point number four, additional living expenses. This pays the additional cost of living away from home if a house is inhabitable due to damage from a fire, storm, or other insured disaster. It covers hotel bills, restaurant meals, and other extra living expenses incurred while the home is being rebuilt. Coverage for additional living expenses differs from company to company. Many policies provide coverage for about 20% of the insurance on a house. The coverage can be increased for an additional premium. Some companies sell a policy that provides an unlimited amount of loss of use coverage but for a limited amount of time. Additional living expense coverage also reimburses homeowners who rent out part of their home for the rent that would have been collected from a tenant if the home had not been destroyed.